If you've been looking for that one video that will teach you about the stock market, then you have stumbled on the right one. Because in this video, I'll be sharing with you 4 different topics about the stock market, which I believe you will learn a lot from. The first thing we'll be discussing is why you must invest. Secondly is how the stock market works. Thirdly is how to actually invest. And the fourth one, which is the multi-million dollar question, is what if it all goes wrong in the stock market? Hello everyone, my name is Damilola. I am a stock market investor and educator, as well as a personal finance coach. If you're coming across this channel for the first time, then one thing you want to do is to smash the subscribe button and this video, because in this video you'll be learning a lot. Now let's go into the conversation for this video. Why must you invest? The number one reason why you must invest is to beat inflation, right? As many of us already know, inflation is going higher and higher on a consistent basis, and one way to actually match up with the energy and even to outbeat it is for you to actually invest. Saving would not save you, investing will. Most of these savings app and platform gives you return around 2 to 3%, whereas the inflation rate is around that same figure as well, which means your money is still virtually losing value over the years, or at least trying to stay consistent with the actual purchasing power. But the moment you switch from saving to investing, then you tweak the whole equation to your favor. When you invest in a well-diversified global fund like the S&P 500, you instantly beat inflation, because over the years it has returned up to 8 to 10% average annual return. The second reason why you must invest is for you to build wealth. It takes a lot to actually do this, but if you stay consistent, not minding what the market does, not trying to time the market or outsmart the market, you will definitely be able to build wealth investing in the stock market. And in the long run, compound interest starts to work for you, which can barely be possible if you choose to save your way into wealth. It is actually very impossible. But once you switch to investing, the odds of you building wealth is higher, right? Because compound interest, like I said, would start working vigorously for you the moment you stay consistent on your journey. Having said that, let's move to the next conversation, which is how do you actually invest in the stock market? When it comes to investing in the stock market, it's as simple as you having a trust or a level of conviction in a particular company and contributing or committing a certain amount, which is then your investment capital, into that company or into that fund. Now, there's something we call the share price of a particular stock. Now, what that is the unit of one share of that company. And once you buy a unit of share of a particular company, you instantly have a stake, a part ownership in that particular company. It is as simple as that. Now, when you invest, there are 2 different ways you can actually make money or build wealth in the stock market. The first way is through capital growth. Now, this is basically you investing in the company. When the company grows, your investment grows alongside. So look at it from this perspective. You invested £1,000 into a company which is selling for £100 per share. Now, if that company grows from £100 to £200, that's a 100% growth. The same way that company grew by 100% is the same way your investment fund will grow. So if you've invested £100,000, for example, your £100,000 also grows by 100%, which makes it instantly £200,000. That is how capital growth is. Now, the other way to earn or build wealth in the stock market is via dividend payout. Now, dividend, in my own definition, is actually the bonus that you receive from a company that you've invested in as a way of them showing appreciation that you trust in their company. That is what dividend is. So you get to get paid out of the profits that this company is making certain amount based on your level of trust in that company, which is seen via the number of shares that you have in that company. These are basically the two ways you make money or you build wealth in the stock market. Having said that, let's move to the third subtopic or topic, if I would use that word, which is how to invest. Now, how do you invest in the stock market? The first thing you need to do is to choose a broker. I've always said the choice of broker plays a massive role towards you hitting your financial goal or your retirement goal. So any broker that will charge you excess fees like transaction fee, service fee, ongoing maintenance fee, and all of that, you want to avoid such broker, especially at the beginning stage of your investment journey. You want to do your proper research before you pick whichever broker you want to use to invest in the stock market. The next thing you want to do is to find out which government scheme is available for you such that you don't have to pay tax on your return or on your gain or your profit in the stock market. In the UK here, we have what we call the ISA. In the US, we have what we call the Roth IRA. In Canada, in Australia, and in South Africa, we have what we call the TFSA, which means the tax-free savings account. Having started that, the next thing you want to do is to add money. There are different ways you can add money, either via your bank app or via your bank card. You can decide to add money to your brokerage account, which your broker will give to you by those two different means, either to transfer or via using your bank card to deposit into your brokerage account. The next thing now is to choose your investment. So what do you want to invest in? Do you want to invest in individual stocks? Individual stocks are basically the companies that you know, the likes of Tesla, Lloyds Bank, Amazon, Alphabet, and so on and so forth. Those are individual stocks in the market. Or you want to go for funds, especially index funds or ETFs, exchange traded fund, which basically is a basket of individual stock put together for you to buy all in one basket. That is what an ETF is. And this way, you are actually minimizing your risk by investing in that. Now, if you are a starter or a beginner in investing, then my go-to would be for you to start with index fund or exchange traded fund. This way, you get enough time to learn about how the market works even more, having that hands-on practical experience of the stock market. Then the next thing you want to do is to then automate your investment. Having made the choice of whether you want to go for individual stock or ETFs, then you want to automate your investments. What this will do is it helps you to instantly eliminate the chances of you being emotional about your investments. Right? Once you automate it, the money is being taken out from your bank, which you've linked to it, to the investments right away. So emotion is taken out of the way instantly. Then you can continue to invest on a consistent basis, thereby taking advantage of every price movement in the market. Now, let us move to the last topic, which is what if it all goes wrong in the stock market? Now, based on statistics, the market has experienced different pullbacks and crashes over the years, but each and every time this has happened, there has always been a recovery phase, right? Which means that if you stay long enough investing in well-researched companies and exchange traded fund ETFs, the chances of you losing your money is actually almost zero. When markets pullbacks or crashes, as the case may be, you have the chance to now buy these ETFs at lower prices. Does that make sense? So there's never been a time when the market actually went to zero totally, right? But we get to have crashes and pullbacks at certain time in the market, which is a normal occurrence, right? So I hope this answers your $1,000,000 question. If you stay long enough in the market, the chances of you losing your money becomes almost zero. And we've come to the end of this video. If you haven't yet, kindly hit the subscribe button. This way you encourage me to keep bringing educative and valuable content that would help you to grow your wealth and help you to achieve your investment goal. I'll see you on my next video as usual. Cheers.